A very good evening, everybody. Welcome to tonight's webinar on trading strategies with a possible inflation in mind. I'm Ming Hui from Fluid Futures, and speaking to us tonight will be Mr. Wong Kon. Kon is an investment strategist with over 25 years of experience in the finance industry. And as the US economy recovers, inflation is likely to pick up, and tonight, Kon will be discussing trading strategies using share CFDs in such environments. Before I pass this on to him, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now without further ado, let's have Conhao speak to us.
Okay, so good evening, everyone. Thank you, Huimin, for the introduction. Yeah, so tonight we're going to discuss about the title for tonight is trading strategies with a possible inflation in mind. The title seems a bit gentle, but I think all of us wanted to know very acutely when the inflation pressure is coming in so strongly that the Fed will bow down to inflation pressure. So tonight, I think that's the key topic tonight. What are the indications that we should look out for? I just want to narrow down to one indication, so to make indicators to make it things really easy for all of us retail investor, or even if you're institution investor, make it very easy for us to monitor that. And if you could see that over the last few months, whether it's Janet or Jay Powell, when the slide mentioned about inflation and possible hike, the whole stock market, it seems like it having a lot of pressure is entering into the rate in the triple-digit numbers for Dow Jones. So then after that, they make a correction between Janet Yellen and Jerome Powell. It says that if you notice that they're very cautious with their words. It mentioned that because the economy is in transitionary. So they use the word transitionary and the market seems to be much okay right now. So again, the key point today, I just want to give it to you straight away here as we discuss along this webinar tonight is that how, what to monitor that will trigger the inflation to be quite accelerated, that the Fed will have no choice but likely to increase the interest rate very soon, very quickly. So what are the things to look out for? I'm going to give you one indicator, which is a very powerful indicator. So we're going to observe in the coming weeks and months and perhaps years. So the timing, I will not be sure when it will that be, but the indicator that I'll be mentioning about, all of us are very familiar. It will help us to monitor the pulse of the inflation in the market Yeah. So with that, I'm just gonna move on. And lastly, I want to thank you all of you for tuning in today. It's 7 p.m. off 7 p.m. I'm not too sure if you have your dinner, but I just have my very quick one. Now, I think most of us may know me. Just a very quick introduction about myself. I was with Philip Capital until about 2013, and I joined them in 2003. So for 10 years, I was with them, and even I brought along, after a while, I brought along my wife. We partnership together, and we joined Philip. That was a very busy period that we have together. So 2013, after 2013, I left Philip Capital for a very good reason, because to pursue my own interests. Now, so after I left Philip in a very good relation, and today they still continue to engage me, and we partnership very dearly together, including tonight. So tonight, there's a promotion I will mention to you very shortly later within this 1 hour presentation. Now, so let me just share with you that, and along the way, I developed this interest in market psychology, behavioral science. Later, I'll describe to you how it works, what is market psychology. And in the recent years, I also developed into, my company also developed into this forensic study on the prices alone. What do you mean by that? It means that we study into the price, we could determine whether there's some unusual activities or some interest that's coming in really strongly. So I'm gonna bring you through how to understand behavior science or market psychology through just studying on the prices alone. So with that, that also lead me to work with the lawyers, especially on solving some trading dispute. Now, I just want to relate back to the story with Philip. Back then, it was all this while since 1995, I was in the derivatives. I was a floor trader before. And then in 2003, I saw something that is changing. That means there's some tide that's shifting. That if you still remember 2003, for those that younger investor is okay, but let me just give you some history here. Is that in 2003, it was because of the SARS, and Asia actually went into a tailspin because of SARS. But before that, I was in the derivative industry, expert in that. But I saw an opportunity then in 2003. The stock market was at the low, but I just felt that in 2003, the Asia stock market, the global stock market will have a pent-up demand, and the uptrend is set to grow since 2003. Then at that point in time, I was looking for a broking house that I joined Philip. I still remember on the sixth floor, if you that in 2003, they're already at Raffles City. On the sixth floor, I was seated there. I would say not they interview me, but I interview the different brokers as well, because I want to find a broker house that I will fit in for the longest period. So I felt that that was in 2003. I was dealing in derivatives, but in the same time, I know that the stock market is about to boil. And I'm the first one, I believe, that I have dual license between derivative license and also stock broking license as well. And I joined Philip. And the key reason why I joined Philip, I remember I sat on the sixth floor in Raffles City, is this. When I sat there, I like the environment. For those that have never been to Raffles City sixth floor, they are still there. Now it's a lounge area. There was lounge area as well. And I observe what the product that they have, I like it, because before that, me and my client, we are trading quite actively in the derivatives. But I want to shift them, because as the tide change, that I believe that the stock markets have a pending demand. I also want to shift my client to also invest in stocks. So I need to find a broking house that they can cater to all these products. And then my feel was that Philip Capital, that's my take, and including today is still the same, but I'm not too sure if the founder or the chairman have the same mandate, but that's what I read into Philip Capital here, is that they are a broking house that cater to be the man on the street providing private banking service. Why? Because when I was there in 2003, I sat there, you name it, they have everything. They have bonds, they have unit trusts, they have stocks, they have derivative, they have forex, and I like it because being part of them, I was able to introduce my client to different market in different season. Of course, this season the market is still hot. If I were to be a stockbroker still, I would still want my client to be participating in the stock market, maybe for short-term trading in the US stock market and long-term investment for the Asia and Singapore stock market. So later I'm going to bring you through, not just talk about the US market. So that's who I am today, and very pleasure to once again able to collaborate with Philip Futures. Okay, so today I'm going to bring you this topic, and obviously, as usual, I'm going to bring you to a lot of case study. These are the recent case study that I have. And now all these case study, you have to understand, is based on my own opinion, um, for my own consumption. But if you're somehow being influenced by my thoughts, my studies, and you want to take action with all these studies, you have to understand that you do so on your own risk. So of course, please consult your broker in Phillip Capital or Phillip Futures. They are all license holder. So with that, I'm just going to move on very quickly to the topic tonight. Okay, so I just want to cover what I'm going to cover tonight. And first part, there's three parts to it. The first part is that I'm going to in earlier the introduction, I think most of you understand that I'm a specialist in behavioral science or market psychology. So I'm just going to give you some example. What do I mean by that? Using how I analyze the Singapore market and Asia market. Then, of course, after that, you understand how things flow. We're going to discuss about the key topic tonight is when exactly the Fed will bow down to inflation pressure, because they are quite gentle with their words. They realize that the mention about overheating of economy, that they're going to hike interest rates anytime, that will send the market tailspin. So now they're very gentle with their words. So we have to also read into their words, but in the same time, what are the other indicator or market, to be specific, to look out for, so that we know that the inflation is being accelerated and the Fed may not have a choice but to hike interest rates. So we're going to discuss that tonight. So I have this topic. I run it, I think this is the third time, but it was very well received. So after that, we're going to talk on that. Then the last part is that we're going to enter to a time of Q&A. You can continue to, we can have exchanges, and you can ask me about things what we have discussed tonight. And if there's time, we will also look at the some of the market, the live market right now, different market, whether it's a Singapore market, US market, or currency. I think I will help you to study together based on what we've learned together tonight. And towards the end, I also want to share with you Phillip Future CFD promotion. And this webinar is sponsored by Phillip CFD or Phillip Future CFD. They call it MT5. Yeah. So I'm going to run through some promotion, and Hui Min on the other end is going to help me with it as well. All right, just the next three slides, I just want to thank Phillip Futures for having this platform. So I just want to also showcase some of the new features that they have, just about 3 slides to let you understand what exactly is CFD. A lot of people do not understand what is CFD. Let me just explain to you very quickly what CFD. But before we understand about CFD, let's us understand about what is an exchange. So SGX is an exchange. NYSE is an exchange. As the exchange stated, is really an exchange, means that if this particular stock, say is DBS, is listed in SGX, Singapore Exchange. Now, exchange means that a product or company listed in this exchange between buyer seller is taking place in a centralized location in the exchange, in CDP SGX. Now, say for example, this is DBS stock, say for example, at $29.51 bid and $29.52 offer. And 100 lots is on the bid, say for example, through the Singapore Exchange, Warren Buffett, say for example, in US, interested to buy at $29.51. So he placed in a bid, 100 lots at $29.51. So the whole world is very transparent, could see that, oh, there's 100 lots placed at $29.51, but nobody knows who is he. It could be anyone else. But it's transparent. It means that those that are interested by will come to a common centralized location exchange. Now, then what is CFD? Now, CFD is this. Now, do remember when you trade in CFD, including myself, sometimes I do like to trade in CFD because they offer a lot of product in one place, and usually the product that they have is much I wouldn't use the word cheaper, but in terms of the contract value is much more affordable. Means that CFD allows different contracts, including US stocks, Forex, indices, to located in one location. Now, what is CFD exactly? Now, CFD, it means that for Philip futures, or they brand themselves as MT5 CFD, it means that Philip futures CFD are quoting the DBS themselves. It's not a centralized location. Now, who is quoting the price? Is Philip futures. Their dealer is quoting the price. Now, the main market may quote at 29.51 cents on the bid side, 29.52 offer. Now, you can realize the spread is much finer compared to all the CFD players. Usually, the spread is slightly wider. Now, so who is quoting the spread for CFD, which in this case is Philip dealer themselves. So now, for me to find a CFD player to trade with them, I only go for the one that is sizable enough. That means the few big boys, you know in Singapore who they are. So Philip is one of them. And by the way, Philip is, in my opinion, because it's not a listed company, so nobody knows how big they are. But in my opinion, Philip Capital, it is the largest broker in Asia. Okay, in case you do not know, but this is based on my opinion, my own assumption. So if I were to trade all this CFD, I would go with the big boys. Now, so what happened here is that they quote the spread. Now, the beautiful part about this is that if I go to trade with exchange, what I do is that some of the brokers don't carry the exchange product. If I'm going to trade certain commodities, like for example, I'm very keen in cryptocurrency, not to invest them, but just to trade them. I do not want to depart so much money to buy the cryptocurrency, but I just want to trade them. And I realized that Philip MT5, they also offer the Bitcoin here as well, which is later I'm going to share with you how it works here. So basically, it's a lot of contracts are listed in Philip CFDs, which I kind of like it. So I have not have account yet, but in this preparation of preparing for them, I kind of fall in love with MT5 CFD, which I told him in the other side before I start. I say that likely I'll open an account with you because as I prepare this, I kind of fall in love with the system, especially the cryptocurrency that they have. I've been looking for a few places for cryptocurrency, but I just couldn't find one that I can trust. Okay, so now this is how it works. Now, yes, the spread for CFD is usually wider, but you have to understand that there's no commission and there's no custodian fee as well. I believe there's no custodian fee also for Philip futures. If I'm wrong, so Hui Min, later on, can you clarify? Then the other thing is that now, because all these contracts are designed by in-house, so sometimes, like for example, later I'm going to share with you, one contract is called DBS shares. Now, in Singapore, in exchange, if I'm going to invest in DBS for men on the street, so basically for CFD, they offer all this contract size that is much smaller for men on the street, which I kind of like it. They even have DBS shares that you can buy one shares. Now, DBS, say for example, now is $30. If you buy one shares, means that your total investment is $30. It makes a lot of sense. Of course, one shares, it may not make sense to you, but if you buy 10 shares, that's a $300 investment. But bear in mind, there's no commission, so it makes sense to do that for those much smaller players. Okay, so I just want to take this opportunity to thank MT5 or Philip Futures for giving me this platform to discuss with you the topic later on. Just a few highlights about MT5. It's a powerful charting software. That's why I say as I prepare this on their behalf, I kind of fall in love. I think I will likely open an account with them. And they provide free live prices, data, real-time charting with sophisticated charting tools. I'm still learning that. And 5 days a week, 24 hours, 5 days a week, they provide online support, which I always call them and bother them. And they always reply to me. On the best part about CFD is that there's no commission and it's very competitive in spread. Okay, so this is what it is. I'm just going to move on to the key topic tonight. Okay, now, oh, there's one last slide here. Okay, what I'm trying to say here earlier was that, so sometimes when I want to trade cross-border product, I have to go to Hong Kong to open an account, all this and that. But for men on the street, is there a place where I can open trade even China stocks, Bitcoin, US stocks that I don't have to open account with, say, overseas broker, which I don't even know them? They seems to be very aggressive. Yes, there is one place here, which is Philip Futures, CFD. Okay, so as I go through the product, I realize that they are still adding on a lot of product adding on. Now they have loads of ETF, shares in SGX, NASDAQ, NYSE, and Hong Kong, which they also have a lot of China stock listed in Hong Kong. So now I provide this QR code. What I can do is to just scan the QR code and go and study into all this product listing. Okay, so then they have all the indices, commodities, and cryptocurrency. Now there's a feature here is that when you go to this QR code, there's all this product listing. When you click on the cryptocurrency, something that I like that currently they're offering this for cryptocurrency, and which I'm quite keen to trade because over the last few months, okay, I'm never an investor in cryptocurrency because I do not understand them. I don't want to invest in them because I don't understand, but I don't mind to trade them just for short term because I like the volatility. Okay, so now just a last slide for Philip Future CFD is that currently they have this promotion, which is when you open an account and you place in $1,000 for this event only. If you place in for new account, if you open an account and place in $1,000, $100 will be credited to your account. Okay, I also quite keen to open, but not because of the $100, because of the platform that they have and all the product listing that they have. Okay, so later I'm going to tell you more about this promotion. It means that once you open, you've got to be a new account. When you open, you place in a deposit of 1,000 Sing, $100 will be credited to you. So I asked them this question here is that, what if a participant or a client open an account, placing $1,000, then you credit $100. Then after a while, they felt that it's not suitable. Can they withdraw $1,100? And the answer is yes. Okay, so you could do that, but of course, you try not to abuse it. That means if you could just seriously go through the platform, if you find that it is for you, then just try 1 shares, 2 shares, or even 10 shares of different stocks available in the market. Okay, let me just go to the topic tonight. And I realized that time has passed by so quickly. Now it's already 7:20. Okay, now market analysis. Let me just talk about STI on my forte, which is about market psychology. How I use technical analysis and market psychology to build up the confidence in my view. And all of you can do that. But I just want to give you one example on Singapore market. And Singapore market also represent the Asia market. So later on during the Q&A, we're going to describe that to you, why I felt the Singapore market for the next 30 years, it is also representing the Asia market as well. Okay, so do stay with me because at the end of it, we're going to have a Q&A. Then we're going to study into the live market as well. Okay, so I have this formula called the market analysis. I use technical analysis plus FA stand for fundamental analysis, and plus another one called the behavior analysis, which is the market psychology. So when I plus these 3 together in my analysis, it gives me a very powerful analytical tool about how I see the market with confidence. Now, it's not a system. It is a system that I'm trying to share with you that you can build in our mind with understanding so that you can carry this with you and analyze market to market on your own. Okay, but I'm just going to give you one example here. But let me just start off with FA, fundamental analysis first. Okay, so basically when you do fundamental analysis, in short, it is what are you doing here? When you do fundamental analysis, you are basically you wanted to know what is the value, what is the worth based on this fundamental analysis. Okay, for example, now in this particular chart STI, that was last year movement. Now something happened last year during the pandemic period while we're still having our phase 1 and phase 2. Now in June-July period, you could see that there was a pent-up demand for STI. And there's this broker called Interactive Broker in Hong Kong. They called me up and they told me about what happened to Hong Kong is that they witnessed a lot of institutional buyer that their fund flow into Singapore stock market. That was, they observed somewhere in June-July period. So somewhere in August, October, they called me up. So we're in discussion. So they asked me, Kon, how do you know the reason why there's so much fund flow into Singapore equity during this period? Now, of course, I state them, I think I know the reason, the fundamental reason. But later on, I'm going to describe to you the technical reason and the market psychology reason as well. Okay, so Now, on the 10th of November, that was my presentation to them. And I took this as an opportunity to really showcase why it is time to invest in Singapore and especially in Asia moving forward for the next 30 years. Okay, so it's for a long-term investment. Now, tonight I'm not going to talk about the fundamental analysis for Singapore market because that's not my topic tonight. It's about the US inflation pressure. So what you could do is that it's recorded. So Interactive Broker, during that night, there was about 28 countries from 27, 28, I can't remember, and about close to 300 participant institutional investor. So it's a recorded 1-hour presentation with them. Basically, I advocate why it is time to invest in Singapore. And also, it's also represent the Asian market. So you have time after this webinar, you can also visit this webinar. Okay, so I just maybe give you some time to take the picture, or you can screenshot and you can QR code later to go through the webinar after this. Okay. Now, so in behavior science or market psychology, basically provide an explanation for why people make irrational financial decisions. Now, basically is that the mass market, usually they make irrational financial decision. Means that they'll chase after the market, or when market have some meltdown, they will also sell the market with great fear. So you see, when the mass market behave as such, it does bring forth opportunity for those who know how to read into it. Okay, so that's called market psychology. Now, so basically what we're analyzing here is that now I can assure you that all of us can do that. So I just want to give you some example, but you take some practice. So I'm going to give you some framework how you can do that. After on your end, you have to practice again and again. Okay, so after a while, I'm sure that you'll derive something from the market. So basically how to study in the market psychology is that we look at data. Now, all this data could be a last time price, high, low, and volume, but it's difficult to analyze the data. It's more easier to, if I convert all this data to a pictorial format, it gives me a chart. So when you're doing chart reading, you have to understand that you are analyzing data, human behavior data, which consists of greed, fear, and also the other small group is called the confidence, okay, the confidence player. Now, so what is this TA? TA we know is technical analysis. Now, I also define it in a much simpler way. It's called, basically when you look at chart or technical analysis, it tells us where we are today. As we look at this STI chart, we could see over the last 25 years, this is what happened. And seems like the last 10 years, STI Singapore market has been a range bound between about 2005 and 3005. So the recent high was 3237, and today is about 3170, about that. Okay, so basically tell us where we are. Now, if I'm going to add on the behavior analysis, basically it will tell us why on such a move. Say, for example, why was I confident that between May last year to November last year that my confidence was very high, and whenever there's a platform for me to talk about Singapore market, about Asia market, I will go for it, and I'll be happily and confidently declare that it is time to invest in Asia and Singapore with great confidence. Okay, the reason is this, because of also behavioral analysis, which we study into why on such move. The market psychology. This is how it works. Why I was so confident that market have been supported or had supported then between about 2002 to 2005. Okay, now again, you can do this also on the end. So basically is that at a point in time, you still look at this chart, it was prepared on the 12th of May 2020. Okay, so then nobody knows what happened because if you still recall, we're still in our phase 1 or phase 2, and market low was at 2208, now it's at 2585, then in May 2020. So I need to find support, and as I draw a line on the left, when you draw a line on the left, basically you're studying into the history. Okay, now what will be the support that make a lot of sense? The support that make a lot of sense, it got to be the previous resistance. And the previous resistance, it must be some a point that was very significant Now, the point is significant. It means that there must be a point that there's a lot of emotion drawn into it back then. And I noticed that in 2005, it was a year 2000. And what happened to year 2000? Year 2000, it was the dot-com boom. Dot-com boom, there was a lot of greed that chased after the dot-com bubble. So is Singapore as well. And then after that, it just busted. So this point, it was significant. So how to get a resistant line, which is today's support, that is of significant, it must have a lot of emotion tied into the market. So I just take it as 2005 as a support line. Now you could see that it was resisted before, resisted once. After that, the US housing bubble broke. Then after that, the market has been supported once, twice, three times. So that was 2005. But you have to understand in May 2020 was a very unusual year because we have pandemic. So I'm not exactly sure whether 2005 could be the support, but I want to look for a support zone. Then I got to look back further into the history. Now, as I look back further into the history, that was during my army days when I was a young adult, start working in Cymex trading floor. Now, back in the 90s, for those that's about my age or older, you will have recalled that it was the Asia boom before the Asia busted, Asia crisis. Singapore, I was in the army. I still remember I carried pager looking at the stock market. Singapore GDP was double-digit growth, 10%, 11%. That was those years. And it was Singapore boom. And now I noticed that back then it was resisted at 2002. Once, twice, three times. Okay, so it was a lot of emotion tied to it. Okay, it was indeed a lot of emotion. I still remember in the army days, my staff sergeant will ask me what stock to buy. You know, I already start investing in stock. But anyway, that was those days. It was resisted. Like what I say, in a technical analysis, the former resistance could be today's support in a progressive environment. So Singapore economy is a progressive environment. Okay, so then I defined that between support zone at the point in time in May 2020 to November, it could be support between about 2002 to 2005. Okay, so with that, in November 10, I have with fundamental analysis, not just technical and behavioral, I also presented a bit about technical and behavior analysis to the institution as well. So it's a good mix of all these. And then I believe that I've do much good work for Singapore market itself and also for the Asia market. Okay, so that's how it works. And once you're able to combine the technical analysis and behavior analysis, to me, it can be a very powerful analytical tool. So once again, you have to have faith in yourself that it can be done on your end as well, but it takes some practice. Okay, try in different market from time to time. I'm sure after a while, you will have certain confidence how you look at the market. So don't just look at technical analysis blindly or faithfully or mechanically. So I was quite concerned that about larger population, about 90% of the chartists, they use it very faithfully or mechanically. But you have to understand there's always a story behind every support and resistance. So it's always a story behind. So behavior analysis is also will tell us why on such move, what was the story back then. Okay. Yeah, so now in a growing economy, let me just share with you another techniques where I've seen over the years, including for the US market. This one, I think you are gonna love this, is that in a progressive environment, and this represents the Asia market. Now, Asia market, you have to understand that why I talk about so much about Asia market now, because shortly later, I'm going to talk about US market. For long-term investor, personally, I have switched my fund about 4 years ago to focus on the Asia market. Okay, so Asia market is for long-term investment, and for US market is for short-term investment. So later we're going to describe that. Hopefully there'll be a lot of questions on that as well. Now, let me just share with you this. We move in stages, level, and stages. This is very much about life. Right? In life, we move in stages. Once we move away from the stages, became a level, because that was our past. Things that we do not understand, we will take some pain and some years to learn, but after that, it became our support, became our floor. Then, of course, there'll be always new challenges. We have new stages. So stock market in a progressive environment or in a progressive country, there's always stages, level, and stages. So that was during the Asia boom, then it kind of formed a pillar support, as you could see. And the last 10 years for Singapore market, and including most of the Asia market, we are kind of move in a range bound. Okay, very simple reason how to understand about why Singapore is in a range bound is because our composition. Most of our stock here listed in Singapore market are either telco, banking, or property. Now, these belongs to the old economy. So old economy, you do not expect a trend to come. But moving forward, I think things will take a different shape for, especially for Singapore environment. If you look at the ground, they are not listed yet, but a lot of tech companies have already set up in Singapore. Okay, so do go and visit the webinar that I've delivered in November 10, 2020. We talk about longevity investment for Asia market, and even today is still applicable because it's a 30 years time frame. Okay, now we saw this stages, level, and stages. Now let's look at the US market. I felt that US market is a bit of propaganda here, that you may come across this statement that US market, look at it, the US market over the last 100 years, it has been going up. Is it true over the last 100 years it has been going up? No, not true. Okay, it's only the last 40 years, since 1980, the market then have started to trend up. But before that, if you invest in 1910, of course, no one will be alive by today. Okay, 1910 and at 1980, Dow Jones, it is still at 2005. So now, US market in the earlier years in their developing economy is also going through stages, level, and stages. Now, until that the crude oil is tied to the US dollars, and the world began to recognize in 1980 that US dollar take the dominance, then it became a trendy market. And this is a period where the e-commerce started to birth off after year 2000. Okay, then they formed another new trend, and we saw a recent all-time high at 35,000. Okay, so this, I just want to let you have a feel and understand about the different market cycle, because I think most of us tuning in are still, we still have a light year, the next 30 or 40 or maybe 50 light years to invest. So it's also good for me to share with you a bit of the longer term perspective between the West and the East market. Yeah. Okay. And Singapore, if you realize, this was today Singapore market is at 3,100 or close to 3,002, is about here. We have stages, level, and stages. And I suspect if things continue to progress in Asia, especially if we can take more dominance on the tech sector and the e-commerce, it will be a very different outlook in 10, 20, or 30 years to come. Okay, yeah. But if you look at the listing here in SGX, not so exciting, but you should go to the ground and take a look what's happening right now. Okay, so all the tech company are already here. Okay. Now I just want to move on to the hot topic tonight. Okay, the organizers say that I can have up to about 1.5 hour presentation. So just bear with me. If there's a forthcoming questions, I will take them anyway. Okay, so but I just want to go through what really is in my heart, that I think most of the retail investors should take a look when they invest in the US stock market. Do I invest in the US stock market? Yes, I do. But my positioning is that I tend to go for short-term trade for US stock market. If you were to invest today, or for me to invest today, I will try not to have a long-term position if you start investing today. Okay. Now, this is how it works, where I will address the issue about when will the Fed actually bow down to inflation pressure. Now, what to look at? Okay, what exactly to look at? Let us study about the fundamental analysis here. Okay, so let me just see how many attendees that we have. Okay, good attendees. That I'm going to ask you some questions shortly. Just prepare this in your chat. I just want to get a feel from you. There's about 69. Okay, my first question to you is that you know that US, they have this bonds, the US Treasury bonds of bills, where they issue all these bonds. Now, my question to you is that who is the #1 investor in US bonds today? I think for US bonds, most of the big boys are naturally the countries. Now, can you maybe type in the chat box and let me see what is your take? Who is the #1 investor in US bonds today? I received China. Maybe could I have a few more inputs? Is it European, Japan, or maybe I do not know. I know the answer, but let's hear more answer. Maybe we have 2 more inputs. I think I received about 3 China. 4, we have Mark mentioned about China as well. Okay, I try to expand my chat box and see if I know how to do that. Oh yes, okay. All right, okay, so most of you say China, Fed, okay? Alfred Tan says Fed, and NGO Neo say that it's Japan. Okay, let's see, okay? Let me give you the answer today. As of March 2021, the #1 holder of the US bonds or the debt is Fed. Now, I want to look at the figure. 5.505 trillion compared to China is 5 times more. Okay, so this is how much the Fed have printed money and invest into their own government bonds. Okay, so that's something interesting, right? But it's related to how can we study into the inflationary pressure that will come in so quick, so fast, that the Fed will have no choice but to hike the interest rate. So I'm going to point you to a market very shortly. So, but let me just cover on the FA part first, which is the fundamental analysis portion. Okay. Okay. Now the next slide here is this. Now this slide represents the federal, that means the Fed holding, only the Fed, the Fed holding of the US bonds, their position. This chart represents the Fed portfolio, the federal portfolio of the US bonds. Now you could see that in September 08, where this housing bubble, in fact, George Bush called Hu Jintao, then the chairman of China, say that they want some commitment from China that to continue invest in their bonds. So Hu Jintao agreed to it. They invested about 700 billion back then. 700 billion bonds, I believe. Yeah, quite a bit of money, if I got the figure correct. Okay. But shortly later, about 3 months later, as you could see here, Fed do the most unthinkable. Okay, all this while, Fed did purchase bonds, but in a very small measure. Up to this point was about 400 to 500 billion dollars of US bonds the Fed had. But after China invested, supported, 3 months later, Fed for the first time did the most unthinkable. They purchased in a huge amount into their own debt market. That means the central bank of the United States, printed money and invested into their paper, their bonds. So of course, the investor around the world, if you were to be invested to buy the US bonds, you will not be too happy about it because here you are asking us to invest in your bonds, and then the next moment your house actually printed money to buy your own bonds. So it kind of gives investor a loss of confidence, not much of a confidence that, so where does this bonds, what's the value, how you equate them? If your own house can print money and invest in it, so it doesn't speak of a good light of the US bond. So, but anyway, it works for the US market then. Okay, on a shaky ground. So of course, over time, the ground will get a bit more rocky and more shaky. So initial years, which is how many years have passed? 12 years have passed. It seems like the right strategy, but it also will impact the fundamental structure of the US financial system. So later on, I'm going to point you to a market, how to study it so that we will time the market when the inflationary pressure is so strong and quite heated up that the Fed will have to bow down to inflation pressure and likely to hike the rate. So as we all know that when Fed hike the rate, it is not a good news for the stock market. Okay. So anyway, it did well for the stock market and economy for the US. So they continue to do that. That means the Fed in different term, they purchase their own bonds. And the latest 2 major purchase, it was during Trump presidency period that he have this CARE Act. Okay, so he purchased about 2.2 trillion US dollars of bonds. And then the latest one was about 1.9 trillion US, which is by Biden. And there's more coming up, as you know, the infrastructure plan and so on and so forth. So basically, the Fed have more, they're the largest investor in the US bonds today. Now, so basically, I just want to explain to you how this thing works is that, now, then it affects the US dollars. Now, so my topic tonight here is it affects the US dollars, which I just complete this understanding from you about. Later, I'm going to move on to TA and BA of the US market, but I just give you a background of the fundamental analysis of what's happening to US today. Now, so when you printed a lot of money or Fed created money to buy the bonds, so basically how would that impact the US dollars? Now, over the long term, definitely the US dollars with dilution in the US dollars will be weakened. Okay, I don't want to have so much reservation to say that may be weakened because these are like physics, right? Whenever you print too much of the money, it's by absolute that over time your currency will be weakened. Okay, so that is like 1 + 1 = 2, right? So it's absolute. So now when your currency weaken, it will bring forth inflation. When your currency weaken, you'll bring forth inflation. So if you want to understand why will currency weaken will bring forth inflation, I will leave it during the Q&A period. I will answer that with some illustration. But I just want to move on very, very quickly. Now, so going back to our key topic tonight, when will the Fed bow down to inflation pressure? So what are the market that we should be looking at faithfully and like a hawk in the next few weeks, next few months, or it may take years, I do not know, okay? But we monitor this market very closely, okay? This is how it works. So I'm gonna combine TA, BA, and FA. I will just explain to you why. Now, we've got to monitor the US dollars, okay? Now, how do I combine the TA and BA looking at the US dollars? Just now, I just mentioned about, it became a fact that when US printed US dollars, when US printed money, US dollars over time will get weaker. That's a sure thing. Okay, so now we look at since Ronald Reagan days. In fact, that was the start of the increase of money supply. That was the start. They issue a lot of bonds and worldwide investors buy into it. There's nothing wrong. That's a very good thing that we issue debt and the global investor, which are the nations, believe in you and invested in that. That's a healthy arrangement. But something unhealthy that started was in 2008 when Federal printed money and started to invest into their bond market. And structurally, to me, it's not sound at all. It may bring short-term goodness, but it may also cause long-term pain in the future. As we could see on this dollar index chart right now, that over the last many years, the US dollars has been weakened. Now, I want to point out something to you that between TA and behavioral science or market psychology, I felt that, as you could see, right, is that the US dollars is being supported at what price? It's being supported at $80. Okay, the player in the market, which I believe is US themselves, are supporting the US dollars at 80. Now, this is based on these studies that we have. Now, you could see that in 1978, it was nearing about $80. Then after that, tested twice, 3 times, 4 times, 5 times over the span of decades. Then, of course, 2008 is a very unusual time for US. The housing bubble finally burst. Then it created a lot of tension, but you could see that the market force are trying very hard to support above at 80. So it did. Okay, we went below, it supported 80, and finally it kind of stabilized. It supported how many times? Maybe 6 times, 7 times, 8 times. And today we're nearing below 90, and one day it went up to about 89. So now the question is that at the moment, I think the Fed still have the luxurious to mention about is they can make that kind of statement that because the economy is opening up, therefore there's some overheating. They can blame it on the opening of economy is transitionary. But I think that we have to look at it very factually. What will cause inflation is when your currency or US dollars depreciate. When things depreciate, your commodity prices will appreciate. See, for example, if you're not aware, let's look at the food prices. How to measure inflation? Food prices will be one of the real indicator here. Is that soya bean, if you look at last year May in 2020, it was at about 800. Today's soya bean in I think last month in May, it reached a high of 1,006. Means that the commodity soya bean food has been double in prices. So why is it so? Partially it's because of the weakness of the US dollars. Now moving forward, how do we know that the inflation pressure is so strong that the Fed may have no choice but to hike the interest rate? They became more serious with their words. Now, look at the US dollars. Now, I would say that based on the current motion they're in between the central bank and the treasury. So it seems like this is the motion that they're getting in. That means to create money to continuous buy bonds and have stimulus package. It will naturally weaken the US dollars. Now, what I personally will be looking at, and you can do that as well, is that every week, every month, or it may take some years, I do not know, okay? But once it break 80, because in the past, the behavior analysis tell me that the market force, it is supporting at $80. So if it ever break 80 and stay below 80, so the key is this, if it break 80 and stay below 80, which is not too far from now, just about $10 off. If it break 80 and stay below 80 and start to trend down below 80, then I believe that the inflation will pick up very, very strongly. And this is the time where Fed will have no choice but to hike the interest rate. So this is how I'm looking at this indicator. This is not really an indicator, but this is a market. So the market can be an indicator as well. So I hope that you draw something down from here. You can see how I analyze the market between, if long term you have to include fundamental analysis because it's important, you need to support with fundamental analysis. But for short term or long term, you should also include TA and BA and also include FA as well. Okay, just want to recap on our key topic tonight before I take on the Q&A and introduce the promotion of the MT5 for this webinar tonight. Is that whenever the ever increasing of US debt, it will definitely weaken the US dollars. Once the US dollars weaken, inflation will come. And if high inflation comes, higher interest rate will kick in. Of course, higher interest rate is not a good news for the stock market. Okay, so this is what you have to know. I can take more questions during the Q&A. I hope that we can have a good exchange subsequently. Okay, so greater volatility may not be a bad thing. Like what I say, in the past, in 2003, I realized that before 2003, market was very volatile. So I was dealing in derivatives. So I asked my client to short, to buy, all this and that, can do both ways. When market is uncertain and volatile, I like to shift my portfolio to derivative. When the market is easy means that I study that the super trend is about to come. I would like to get into equity market and hold it for long term. So you have to understand market cycle. So depending on where the cycle is right now, I felt that if you look at the long-term perspective, the safe haven is in Asia. Okay, so by the way, most of the Asian market, China stock market only started in the 90s, if you're not aware. After the Cultural Revolution, they stopped completely and they only started in the 90s. Hong Kong, Singapore stock market only started in the 80s. So is the rest of the ASEAN market. So I would say that our Asia stock market are relatively young, but you know the potential, how the Asia market is like today. Okay, we can take on during the Q&A later on, but you know where I'm drawing at right now. So definitely for long-term investment, I'm looking into Asia. So, but I don't mind to trade the US stock market. I'll share with you one of the trading techniques, how I get into it. Okay, so let's see. Okay, let me just share with you the some of the investing and trading techniques or strategies that combine TA and BA. So now let me just share with you that if you are more of the short term, you can consider to exclude the FA. But if you are on the long-term perspective, you should include the FA. Means that you use TA, BA, and FA together if you're long-term. But if you're a bit shorter term, sometimes you can consider to exclude the FA because you're just trading into the volatility. Okay, let me just share with you one example. Because if you get into MT4, I would say that the profile of yourself is slightly a shorter term investor to a short term trader. Okay, when I say short term investor means that likely your holding period is about between 2 days to 3 months. That's how I classify short term investor. And traders, of course, it could be between 2 days to um, just a few days. Okay, now, okay, so earlier I mentioned about the beauty about CFD is this, because CFD mainly are the market maker code. They are not the centralized, they're market maker, means that who make the market, it is Philip Futures, their dealer themselves. Now, I just want to clear some misconception in the marketplace is that in the past, people will say that CFD, the dealers, they would like to trade against me. No, but I can say that the big boys that I know, at least in Singapore, they are not interested to trade against the client, but rather they are just there to produce the bid and ask price. Maybe they are out there to hope to make some spread, but without commission. I think that's a beautiful part about it, right? So from the big boys that I know in Singapore, at least those CFD player, they are not interested to trade against the customer because that's not their mandate. This is based on my own assumption, okay, based on my observation. Now, they have product like this, which is very small, which I kind of like it because as I also train in the marketplace, because some of the traders, they are potential, they have the potential, but they at the start they don't have the funding. So it's important that if you belong to this group, you may want to consider to get started with CFD trades like this. Now they have contracts like this that's very small and minimal, which is quite digestible. For example, 1 point of if you want to trade into Nasdaq 100, their contract spec states that 1 point is $1. Now means that if you buy or sell short at Nasdaq at $13,500, what does it mean? It means that you take, since 1 point is $1, you take 13,500 times 1, the market worth of buying or shorting 100 tech stock is the actual worth is at 13,500. So this is a very comfortable amount that I think most of the men on the street who have the flair to trade is a good and gentle product to get started with. Okay, so this is one of the smallest contract that I come across among the compared to the futures. Okay, the futures, the smallest one is the exchange product is about 2 times larger than this. Now the other one that I like is they have even 1 shares, like for example at DBS. I checked with Philip Futures, they say that yeah, it's true, they have 1 shares like this, but not in the US market yet. US market, I believe today is 5 shares minimum. Okay, so 1 shares minimum, what does it mean? Because in Singapore, if you want to buy the minimum lot for DBS is about 100 shares. But for MT5 CFD in Philip Futures is that you can buy DBS at $30 for just 1 share. So basically what 1 share means is that you take 1 times 30. That means your full investment is $30. It makes a lot of sense because there's no commission. So even for the smallest guy in the street that just want to get their finger wet just to learn, you can do that. Okay. So does it make sense to invest 1 shares? Of course, not much. Maybe we can try 10 shares or 5 shares. But always focus on percentage gain. Don't focus on the dollar value. If you want to be a good trader, you can practice with small amount. But each time you practice, you try to, you have a logbook. After that, you measure performance based on percentage, not on dollar value. So once you can derive a consistent percentage that you can fulfill that, then you should increase your size, not just 1 shares or 5 shares, but more. Okay, so this is how you don't paper trade. Okay, you try the actual one with the actual money. Then you really feel your own emotion. Okay, so for more contract specs, I have prepared this. You can do a QR scan code. You study into the different contract specs for the rest of the market. And I was quite shocked when I have this trial account with MT5. And after a few weeks later, more products have been added on. Okay, so I think that's a beautiful part about Philip Capital. Okay, because they are sizable, they have all these resources to do it. Okay, so I have this weekly chat, Telegram chat group where I'll post the most current market into the chat group so that the audience or rather the participant were able to see what I'm seeing. But the whole important thing is that I wanted to keep learning, okay, what I see. Now, let me read from this script here that I've written because I do not want to miss out anything because it's related to the promotion tonight, the 100 Sing dollars promotion that's given to you, just like that, okay? Now, I say that this is the first time I collaborate with Phillip Futures CFD in this manner to continuously train their clients to understand about the markets, opportunities, and how to manage calculated risk. So this is the first time I collaborate with Phillip Futures with this Telegram chat. Now I have this Telegram chat where I post a case study on the most current market every Monday or Tuesday. Now what's the objective of this Telegram chat group? Is to give the participants a platform to continuously practice, and practice to apply what they have learned. So we believe that over time through this mode, investors and traders should gain proficiency in deriving their own view confidently. I want the retail investor to derive your own view, not to be too dependent on what people's recommendation or even system triggers. Okay, system triggers are not too consistent. After a while, you could see that. But I want you to develop your own confidence through analyzing with TA, BA. Then through this chat, you may also want to ask me about the FA as well. I'll try my best to give you the FA development. Okay, so this is what a collaboration that for the first time I'm doing with Phillip Futures, which I'm quite excited because to me it's a long-term thing between the three parties, myself, the broker who is Phillip, and also the end user yourself. Okay. Now I just want to share with you how I trade the market. Even today, I felt that the US stock market or indices, if you want to trade them, it is still uptrend. So basically, if you want to trade a little bit short term, you have to understand where the trend is today. So if you find that the trend is up, you try to focus on dip. When the market dip, there's always dip. You focus on the TA plus the BA. Okay, TA plus BA means that there will be moment as the market dip on the uptrend, it produces engulfing body like this or a hammer. Now, we do not just go after any engulfing body or hammer, but make sure those with high weighting, which I'm going to introduce you how to read into them later on. Okay, so it's a combination between TA and BA. So this one I posted on this chat group on the 6th of March. Now, what did I say? I say that the US market was still moving south. Yeah. So we analyzed that the main trend is still up. Therefore, I view that the market as a retracement and look out to buy on dip with a calculated risk. In case you do not know what is a measured risk, it's a calculated risk. Because when we trade the market, you have to measure with a calculated risk. Now, the following case study demonstrating the biting point on buy on dips. What the biting point means that when you combine TA and BA, to me, it's like a biting point. Biting point means that you know exactly when the fish bite and you got to parry a bit. So, yeah. So, but of course, nothing is absolute. Sometimes you may miss it, but you will be so sensitive that you know when to parry that the fish. Okay, you make sure you get it. So then subsequently, that's where the market is today. It's still trending up, but I don't quite like this move. So in fact, I'll cash out quite a bit, and my position from this investment has been pretty light right now. Okay, which I believe that market will fall a bit, but as the market fall, we should be still continue to look out for buying opportunity with that biting point techniques, with the analysis between TA and BA. So this one you can apply it on your end. Okay, still remember on the 10th of November, I just want to finish this. Then after that, we'll go to the Q&A very shortly. On the 10th of November, I spoke to this institutional investor, about 27 countries, about 300 of them through Hong Kong, because they want to understand why I say that buying in Singapore is about time. Okay, why I say that the next 30 years, we have a 30 years of runway for the Singapore stock market on 10th of November. Now I'm going to reveal to you a bit of TA and BA, why I was so confident back then. Okay, so I mentioned about the FA, so please watch the video. Now the TA and BA, apart from that support zone, which I described earlier, but there's also this thing, okay, these two things. As the market fall, you realize that there was a lot of fear. Then suddenly, without any good news, the market also gained confidence. So this is how we study into those bullish engulfing body that has high weighting. It must have emotion tied into it. So why the market suddenly perch out despite that we're still in phase one? So there must be a reason, right? So when I saw this, I kind of know that perhaps 2208 could be the low for the time being. So it's quite telling. Then that was July when Interactive Broker in Hong Kong witnessed that there was a lot of fund flows from around the world through Hong Kong to Singapore market. Okay, so that's where I make my presentation on 10th of November, and happened that you also produce another round of fear and confidence, which I kind of like it. Okay, so today where we are today, the recent high was at 3237. So you realize that what we described here tonight between the TA, BA, and FA is applicable to different market and in different time frame. Why, you may ask me? Because the human behavior, the psychology is pretty consistent throughout different time frame and market. And in case you're not aware, even right now, there's a very nice W bottom, okay? Double bottom, all right. Double bottom that form the W shape. Okay, so what is this next one is that now this is the e-cost. Earlier I mentioned about the framework, right? So this will be the e-cost called timing the market. Now we all can invest and trade with greater accuracy, where you will learn about the framework on how to identify market opportunity using TA and BA. So this program itself is talk about just TA and BA, give you the framework how to do it. So e-cost, it means that you can access it again and again. Yeah, now without this, I just want to give you the framework, the structure of this e-course. You can QR code scan. So later on, you can study into the curriculum. Just go through the curriculum and study into it. But I just want to give you a highlight in short, what are we doing in this e-course? Then every week, I will flood you with one case study. So we believe that over time, we hope that investors and traders will build up this ability to analyze opportunity on their end as well. But of course, if you want to share into the Telegram chat group, where most of them are doing right now, I think it's quite fun. So in a way, I'm building this community of traders and investors where we share resources. But these are the framework that I want most of the traders and investors to go through. That we study into the prices and the behavior of the prices. Sometimes it can be one price, it can be a cluster of price. We're going to study that. And also to confirm with the volume. It can be one volume or a cluster of volumes. It depends on the prices. We're going to confirm with that. So once we have this tool, we should able to make a decision for entry. So that's the key, where usually when I share in the Telegram chat group on the case study, I will share about the entry based on studies, not on my recommendation. But after enter the market, sometimes market may have a whipsaw. So during this e-course, I will also mention about how to manage market whipsaw. Now, after that, every week, we have this continuous support Telegram weekly based on the current case study. So this is what is something will look like this. I'll post a chart that those who go through this course is about 2.5 hours program e-course. I'll just go through it. Then when I post a chart, I mentioned about all these hammer with weighting. You should be able to recognize it. Now, if you're new to this, you're new to stock investment, it's okay. Just take your time to go through week in, week out. I believe that over time, you will have certain mastery. It's all about learning journey. Is about a period. It's never one weekend or one course. It's over a period of course. But I thought that this arrangement is fantastic, because with this e-course, the participant able to review the course again and again, and every week, no expiry date, okay? I will continue to showcase case study every Monday or Tuesday. So of course, all this past case study, I've been doing this for the last 7 years. I'm still getting all the past case study to post on this e-course. Okay, so it will take me some pain, but I will want to do it. So you even can study back into the past. Why there's so much confidence and precision that our view was back then. So you can study the past, and it became very good case study material for this e-course called Timing the Market. So within this course, how I structure it is that after you study this course, every week you go through this Telegram chat, then you can revise the e-course again. So 1 week later, I'm going to release this, which is called, you'll learn about how to have a position entry for income stocks. I don't want to release too soon to you because I know that most of you, after accessing this program, you'll jump straight to this. But I will deliberately hold back because I want you to go through this for 1 week. Then every week I'll release one tab. The second week I'll release how to have a precision investing for value stock investor, how to create value precision investing for growth stock investor, and of course for traders as well. Okay, so the whole thing is that you can revisit that e-course again and again while wait for the case study. But I think the most encouraging thing is that subsequently I see the newcomers on board for this Telegram chat. Once they learn, they understand, one of the most encouraging things is that they also start to produce case study and share to the group. That's what I like the most. Okay, doesn't matter if it's wrong, because that's where some of us, or even myself, I will come and make correction. Okay. Okay, so there's this coupon code. Yeah, there's a fee for that. How much is it? Is $265 US. But there's a coupon code for discount, a 20% discount. The 20% discount will be $265 US minus 20%, that will be $212 US. So the coupon code is 03JUN21. Expiry date will be tomorrow 10 p.m. So I do not want to rush into it, but do the QR code scan, read through the curriculum. Then if you find that it speaks to you, then subscribe to it. So once you subscribe to it, then I will also email the link for the Telegram chat group that you can join the rest, and you can also review the past case study and what are the exchanges like. Okay, so okay, where's the promotion, where the Philip promotion comes in is this. Now the cost fee is $265 US. Why I price in US dollars? Because the audience also have overseas. Now you have to understand that when you mention the word dollar, the Americans cannot comprehend what is Sing dollars. They don't understand what is Sing dollars. So I have no choice, but I have to put into a currency that most outside Singapore, they understand what is dollar. When you see the word dollar, people will recognize that it's US dollars. So I have to price in $265 US. In fact, the cost is at 350 Sing dollars. Now with 20% discount, it became $212 US or 280 Sing dollars, about there. Okay, so expiry date will be tomorrow at 10 p.m. So please do study through the curriculum. If it speaks to you, please subscribe to it. Then I'll send you the Telegram link. Okay. Now, so then where does this $100 Philip will reimburse you $100 is this? So 2 weeks later, so the first step is that you have to subscribe to this program. So Philip Capital and myself know that, or Philip Futures and myself know that there's some commitment on your end. Then after that, you have to open an account with $1,000 deposit. And shortly later, MT5 or Philip Futures will reimburse you with this $100 Sing dollars. Now, even after a while, you find that you like the program, you like the Telegram chat group, because this is where you can learn. You say, but I'm not ready to trade. You can withdraw totally 1,100 Sing dollars if you want to, okay? But of course, I will discourage you not to abuse the system. Just try to get your finger wet a little bit. Okay, so technically, to me, that is quite a sweet deal. Why I'm so excited, because I mean, for those that following my program, you can feel that tonight I'm quite excited, because this is the first time I collaborate on such an arrangement that Philip will reimburse $100 to your trading account, not on the cost fee. So technically, the cost fee is at 180 Sing dollars. So it's very sweet. Okay. Now, I've never want to price my cost high, because I want more people to learn about this. Now, why I did not price my cost high? There's many reasons, because one of it is that I don't have any overhead. Okay, so I have no overhead. It's just me, and I just enjoy doing this. I also do not pay expensive advertising dollars. So I don't feed all this, but I just want to let the end user really enjoy affordable program, but it's a good program for them, which I'm so glad that Phillip Futures also came into the picture as well. Now, so this only available for the first 30 sign up for the course. It means that when you sign up, the first 30 sign up for the course, you will entitle the $100 reimbursement to your trading account. Okay, so now if you find that up to tomorrow you try with this code O3JUN21, then it stopped you. It means that it passed 30, but you still can enjoy that 20% discount up to tomorrow 10 p.m. But you try this code O4June21. But when you try this code O4June21, it means that you will not be getting the 100 Sing dollars reimbursement to your trading account. Okay, so you try this O3JUN21 first. Okay, so with that, I will now go to the Q&A. I hope that I've got this live chat ready as well. Okay, so this is the QR code, and then I have this Facebook page where you can like or follow it. Today I just post an article about direction of gold market. You can take a look at. A lot of people have missed out gold, but gold has been slowly creeping out because of the weakness in the US dollars. Okay, so this is my Instagram, and of course this is any question you can always email me to contact@weipedia.com. Okay, so with that, I will take this time to answer a few questions relating to our topic tonight. If possible, I will also go to the look at the live market as well. Okay, so this is something that if you find that what I presented, especially on the US inflation part, is really interesting, want to get hold of the slides, you just do a QR code scan, let me know. Give me about the next 1 or 2 days. I will email the slides to you, because some of you may want to study into detail, but of course you can always go back to Phillip Futures, the webinar. I think they archive all this video. So okay, this time I just want to you can ask me any questions. That's what we have described tonight, and some of the question I may not know how to answer because it may be related to MT5. Okay, what if I already have MT5 but have not been using it? Now, okay, so it has to be a new account with MT5. Okay, so yep, it got to be a new account to enjoy the 100 Sing dollars rebate to your trading account. But if you like the program, I will still find that just go for it. Don't just focus on 100 Sing dollars. Okay, just if you like the program. Now, I think the next question that we have is that any question that you have? I'll open up this time for Q&A. You can ask me anything. Okay. Okay, what is your take on the US MEME stock? Okay, my take for MEME stock is that fundamentally it is not there. So these stocks are meant for trading. So what you could do is that instead of looking at the daily, weekly or monthly chart for long-term perspective, you may consider, now you have to understand that once you get into trading, now there's a different portfolio on my end. One is for investment and one is for trading. When it's for investment, I have to include fundamental analysis. Means that I must know what is the intrinsic value at the price I paid. Does it worth the dollar I paid? In case that thing turns sour, do I want to hold it? Because there's an intrinsic value tied to it. But most of the MEME stocks, right? The intrinsic value I will not consider. So, but I do enjoy the volatility. So therefore, you have to carry a position or understanding that if you're going to trade in those stocks purely for trading, so you may want to try to look at the smaller time frame, apply what I just go through with you, study into just the TA and BA, and know a bit of fundamental, but I don't think that's very applicable for all these MEME stocks, right? Then after that, always have this. Okay, once you get into a trading portfolio, you must always include calculated risk. Now, what do you mean by calculated risk? It means that whenever you decide to get into a position, whether to go long or sell short, then you always have to ask yourself this question. In the event I have this view, if I am wrong, where is my calculated risk? So if it really triggered a calculated risk, you have to trigger it, because these are meant for trading. It is not for long-term hold. So that's my view for ME stocks, including cryptocurrency. Do I have a view on cryptocurrency? My answer is no, I don't have view for cryptocurrency. So very simple reason. About 2 weeks ago, there's this cryptocurrency consultant came to my house. Actually, he came to visit my wife because they are into arts. Yeah, they're into arts. And then I take the opportunity to ask this cryptocurrency consultant. I say that I never quite understand cryptocurrency, but can you tell me that is there a way to calculate the intrinsic value of any cryptocurrency? He said no, not at this point in time. So therefore, if as long as you cannot calculate the intrinsic value of any assets, that one cannot be for investment. At least this is on my own standing. You may disagree with it, it's okay. That's investment and trading all about. It's an art. That's how I define it. As long as you cannot calculate the intrinsic value of any assets, I will not want to switch to including that instrument as part of my investment portfolio. Those are for trading portfolio. Okay, how about for the EV stocks? For those that find that what's EV? EV means electric vehicle stocks. With good result, it does not influence. Let me see. I can't really read the. After that, it does not influence something. You put dot dot dot. I can't really see. Min Hui, maybe you got to help me. What's the question about? How about the
Okay,
EV
the
stock? Good result.
question
Does
is
not.
if you click onto it, you can see it, but okay, I will read it out to you. It says,
Yes.
how about for the EV stocks with good results, it does not influence the stock to move up. Any idea why?
It does not influence. It does not influence.
The
Again.
stock to move up.
It does not influence the stock to move up. Any ideas? No, I don't have any ideas. Okay, but the thing is this: if you find that what I mentioned it make a lot of sense, that means to study the BA and as the TA and especially the BA. Sometimes this is how the market move. That you find that fundamentally is good, but the stock do not move. Then what you should do is that now we do have control over it. We don't have control over it. Now, but if you have KIV, the stock that you like it, what you should do is to KIV it. Okay, it don't move is fine. You cannot force it to move anyway. But if you like fundamentally, I will usually KIV it. Now, you can do this every day. You observe the market movement, or at least once a week or once a month, you look at your favorite stock. Now, one fine day, it may move. Now, one fine day when it moves, then you study into the BA and TA. What does it speak to you? Is the genuine buyer coming in? Then if the genuine buyer is coming in, that means that because sometimes it's rotational play. When they come in that you know the serious buyer in, then you go with the flow. Because the money in the market is only that much. Sometimes they move in season with different sector. So, but if you like this EV stock is not moving, you're right. When we invest in those stocks that move. Okay, we don't invest in those stocks that do not move, right? Then you just have to wait and observe for the development. Okay, so for this, the Telegram chat group, this framework of understanding the BA and TA will definitely help you timing the market. Okay, let me just take on the last two questions. Then I think we're quite time tight for that. It's coming to 8:30. Okay. Now, so in your opinion, when will Fed kicks in inflation? Now, it's not the call on the flag, but it's not when. Okay, your question is that in your opinion, when will Fed kicks in inflation? So now it's never the Fed call to kick in inflation. It's always the market force. Okay, now the Fed could intervene. You have to understand the difference. Huh? The Fed could intervene, but sometimes they may not be able to intervene much. It means that it's always due to the market force. You have to remember that it's a free market for US market especially. It's a free market. Now, so what if, I share with you, if the world start to sell US dollars, say for example, I give you, just give you illustration. Now, the world investor are holding a lot of US dollars today. Now, I give you a proposition here is that a scenario. What if something trigger cause the world investors, including the nations, to start lose confidence in US dollars and start to sell US dollars? When they sell US dollars, it means that US dollars are returning back to US in one way or the other. When this happens, that means US dollars should be weakened further. So it's not Fed call when to kick in inflation. Fed is to manage inflation. And when that happens, when US dollars start to move down quicker than expected, inflation will pick up. Then Fed will have to increase the interest rate. So it's not Fed call, okay? It's Fed will have to manage this. So I think it's a very good question. I think I like that. Okay, I move down along the line here. So what percentage of fund do you set aside for trading versus investment? It depends on season though. If the market, let's say I talk about Singapore market alone, if you're just trading the Singapore market, say that Singapore market are uncertain, say for example, is uncertain of no direction of the trend, but the market are pretty volatile. Then my allocation for margin account and investment account could be about 60 on stocks. Let's say I'm fully invested, 60 on stocks and maybe 40 on margin account, because market is volatile for me to trade, but market is pretty boring. There's no trend. So I do not want to allocate too much on the stock market. But come a time where I felt that the market is trendy, very trendy and very nice, and there's a long runway for the stock market to pick up, long runway. Yes, there's some volatility as well, but I will not want to spend too much time on trading all this small profit. I will flow more of my fund to stock market. Yes, I will still always have a margin account. Maybe I keep about 10% on trading, margin trading, and 90%, let's say I'm fully invested, 90% to the equity market, because the equity market has a long runway and is at the beginning of the runway. Okay, so that's what I would do. It really depends on season to season. Okay, okay, we got to start at 8:30. I think we will take on the last one questions. Okay, there's a few coming in. Let me just pick one, okay, if you don't mind. You can always email me if you want to. Okay, I think this is a very good question here, is that why the inflation will go up when US dollars go down? I think that's a question, right? Why will inflation go up when US dollars weaken? I think that's your question. When go back to US. When US dollars go back to US, now you have to understand why when US dollars go back to US dollars will come down. It's a very simple reason, because since 1970s, okay, when US sell Middle East oil in US dollars, means that when they sell oil, we buy the oil. Say for example, Singapore buy the oil, we pay US dollars. Okay, so we pay US dollars means that we receive US dollars. Now this relationship all over the world has been going on. Just giving you one example here, since 1970s until today. Now the whole world is holding US dollars. Say for example, since 1970 until today, for the last how many years? 50 years. Now say one fine day we sell US dollars for whatever reason. Now, so all these years that US dollars have printed the money has been exported out. Now, say in the situation where we lost confidence in US dollars, we start to sell. Sell means that the US dollars go back to the land of US. Okay, just imagine that. So that means all the last 50 years when US dollars have printed, now most of them go back. What will happen is that it create a huge dilution of US dollars, and therefore US dollars will go down even more. Okay, so therefore it's important for us to study, okay, whatever the Fed say, but look at the market itself. Which market? The US dollars market. So the US dollars market hit 80 and stay below, we will know when to pull the trigger. So hopefully by then you're equipped with the knowledge, and also the account is ready. But back then, I suspect that when the US dollar start to turn or the US stock market start to turn, I think in this program, I suspect and I believe that we should be able to pick that up. Okay, the biting point. Okay, so please subscribe to it. Any questions about how to engage yourself in this program and the Telegram chat, you can email me. Let me just give you my email address. Okay, just take the picture here. Okay. Or then for the program, it will be this QR code. Okay, so with that, I want to thank you all the questions, especially the last one. I like the last question. It kind of conclude everything what we understand about what we should be looking out for in the near and far future. Now, if you're going to ask me when it will happen, I do not know. But when US dollars start to weaken, you should be very sensitive to pick that up. Okay, with that, thank you so much for staying through, and I hope to hear more of your sharing as well, not just from me, but your sharing as well in the Telegram chat group. Thank you.
All right, thank you for the insights, Konhao. It was a very engaging session. We will conclude the webinar here. So thank you very much to everyone for your time tuning into this webinar tonight. If you have any other questions, you can send them to us via the survey that should appear at the end of the webinar. We will also be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. So that's all for today. Thank you, everyone, and goodbye.
Thank you.